as Lloyd pointed out then. Last time we were at $2.75 for a gallon of gas versus about $1 more for today. We had 6.7 million Americans unemployed. We have double that unemployed today. Americans on food stamp, essentially close to double today, 47.6 versus about 26 million at the time. And the balance sheet, we were in a whole lot less trouble back then, bottom line, and a whole lot less spending on the part of the Fed then versus now. And of course, the debt was about half what it was then, what it is now. Consumer confidence was a lot higher then than it is now. But again, I want to stress that was all before everything hit the fan. Does that mean we are on the precipice of once again hitting the fan? Swiss America Chairman Craig Smith on then versus now. What do you make of that, Craig?
Well, a big difference 5 years makes, Neil, and of course a big difference of a Fed that expands a balance sheet from about $89 billion to somewhere around $3 trillion, Neil. And
what that means, Craig, you're an encyclopedia, but I want to remind you, what that means, the Federal Reserve has been providing a great deal of stimulus to this economy, obviously to this market. It was barely doing it 5 years ago. It's doing it on steroids almost since, and every day since. What do you make of that?
Yeah, you've got that right, Neil, and we talked about it a couple weeks ago, or maybe last week, that the most powerful man in the world right now is Fed Chairman Ben Bernanke. He made it clear a couple of years ago, Neil, that he was going to support the prices on Wall Street, and he's made it clear, and he's done a very, very good job in doing that. But I think what's happened, Neil, is that the public tends to think that Wall Street is the economy, and they're two very separate animals. The economy is struggling. We used to have a 2.5% GDP. We now have a 1% GDP. And so while everybody can get pretty excited, yes, today we had a notional high in the stock market. But what if you were to adjust it for inflation? What if you were to adjust it for the debasement of the currency that we've been going through? Then I think you would probably be excited if you saw a Dow at 25,000, but not at the old high of 14,000. So people can get real excited about this. There are people that are not shrugging off some of these numbers, and those are the people over at S&P and Fitch and Moody's who are very willing to downgrade America's credit if we don't get our acts together, Neil. And I'm very concerned about that going into the end of March.
You know, there was a story out there talking about those ratings agencies that they held back when these sequestration cuts went through because to hear some of these wire reports, they figured some cuts were better than no cuts, even clumsy cuts better than no cuts, even awkward, sloppy cuts better than no cuts. So in a way, sequestration kind of saved the day. What do you make of it?
Well, I tell you, you could argue that it did to some extent. And let me tell you, I think this provides President Obama a golden opportunity. The Republicans have said, look, we'll give you the ability to make the cuts. Let's not make them sloppy or hatchet cuts. We'll give you the pen. We'll let you decide which programs get cut and how the money's moved around. You would think he'd jump at that, Neil, to show leadership, to show, I'm going to show us the way out of the wilderness. I'm going to be the modern-day Moses. Instead, he's run. And what we're going to see now, Neil, is who is political in Washington, D.C., and who is a leader in Washington, D.C., who wants to play politics or who wants to get America back on track. I think it's going to be a wonderful opportunity for Mr. Obama. I hope he seizes it. If he doesn't, it's going to be another lost opportunity in his presidency.
All right. Thank you very, very much, my friend Craig Smith. Real quickly before it sees, I do want to show you a corner wall.